Hi, my name is Mike Dunbar, President and Co-founder of Financed Homes. I'm here to show you how you can become a proud homeowner starting today despite your ability to qualify for a mortgage or even a credit card. In fact, through our Catapult Your Way to Homeownership program, I'll show you how you can even select the home of your choice. I'm willing to bet you're here because you've dreamed about becoming a homeowner for some time, and perhaps you're struggling to save up a down payment to do so, or maybe even having trouble getting qualified from the banks due to some past blotches on your credit score. Whatever the case, if you're feeling trapped or frustrated that you're unable to get your life moving in the direction towards ownership, you're in the right place. In this video, you'll discover how you can find yourself well on your way to owning your very own home in a short time. If you are the victim of any of the following circumstances, then perhaps it's time you start taking control back. You have made mistakes in the past with your credit and now don't qualify for financing. You have recently immigrated to Canada and have little or no credit rating at all. You have a past bankruptcy that is preventing you from owning, currently self-employed, you've been the victim of identity theft, or you've been through a divorce affecting your credit. You may have heard of rent-to-own programs in the past, and perhaps you have doubts right now about engaging in such a program, and that's great. Allow me to explain. I believe healthy skepticism is a great way to protect yourself in the long run. After all, how could you possibly become a homeowner if you can't qualify for a credit card? Well, in my experience, it's simple. You need to have a feasible strategy, focus, and accountability to follow through on this strategy. So how is it that our program can work for you while others can't? We treat you as a person, not a number. We'll listen to your story, while the banks are only interested in what you look like on paper. They are not going to take into account the fact that you've made positive changes in your life towards ownership. From your story, and based off your information, we develop your unique plan with affordable monthly payments. We then project this into the future to best position you for qualifying for your own mortgage. We work with you one-on-one during your term to keep you on track and focus with the plan, so you have the confidence that you'll succeed in the end. So without delaying any more, let's quickly examine how a typical rent-to-own works before we get into a specific example. There are two parts that you will be responsible for when doing a rent-to-own with us. The first is the deposit. Your deposit forms the basis of what will eventually become your down payment in the future when you buy. The second is your monthly lease payments. This payment will include rent, insurance, property taxes, and strata fees if applicable. These are all fees that you can reasonably expect as a homeowner in the near future. These monthly lease payments will also include your monthly option credits, which we're going to cover next. Let's have a look at the option credits a little closer. This is the amount credited back to you each month toward your down payment on your new home. When added to your initial deposit, you will have the desired amount of down payment to satisfy Canada's lending institutions to qualify for your own mortgage. I want to take a moment to make a note here. Your monthly lease payments and option credits are calculated in advance to position you best for mortgage qualification and do not change throughout your term. Your monthly lease payment is calculated to closely resemble the mortgage payments you would expect as a homeowner in the near future at reasonable future mortgage rates. And because you will now be in the habit of budgeting these costs each month, it will be a seamless transition to making your own mortgage payments in the future. To better understand, let's have a look at a specific example. Let's say that once we chat with you and verify your income and expenses, you qualify to purchase a home for $305,000. Given your credit history and the time it will take for us to help you repair it, we decide that a 3-year term is good for you. You have an initial deposit of $12,200, or 4% of the purchase price of $305,000. According to your income, you decide that you are comfortable with a monthly lease payment of $1,850 per month. We'll come back to how these payments are calculated in a few seconds. During your term, you'll be credited $235 each month that will go towards your down payment. That means you'll have $12,200 plus $235 each month over 36 months, or a total of $20,660. The price at which you will purchase the home for in 3 years has been set at $343,083. This was calculated using a 4% increase in value per year. This means that you'll have over 6% down payment for your home in 3 years. With your newly established creditworthiness, this will be more than enough to satisfy a lender in Canada as a first-time homebuyer. So a short recap. Your term is usually 2 to 3 years. A small deposit is put down, typically 4% or more of the purchase price. In our example, $12,200. Your option credits on a monthly basis are calculated according to your unique situation. Again, in our example, we use $235. Your option credits each month, plus your initial deposit, forms your down payment in the future. In our case, this represented more than 6% of a down payment. Usually, we like you to have a minimum of 5.5% down payment to comfortably know you will qualify in the near future. So let me ask you if you noticed anything about these payments. Since you're getting back $235 each month, what was your net rent for the 36 months we were helping you purchase the property? That's right, $1,835 minus $235, or $1,600 net rent. Depending on where you decide to live, that could be less than you would pay in rental fees.
But my question to you is, where would you be if you didn't do it?
Would you still be trying to establish enough credit to buy your own home? Or perhaps you'd still be struggling to save up enough down payment. By the way, if your new home's value goes up more than 4% a year, which is quite possible, you get to keep all the equity for yourself. This can be achieved, of course, by doing basic upgrades to your home. In the end, it's kind of a one-sided agreement. We have to sell it to you for the agreed-upon price, but you don't have to buy it. You have the option to buy it. It's up to you. There are a few variables that we can play around with to customize your plan for you. A larger deposit usually means we can reduce your monthly lease payments.
A lower down payment may be compensated for by increasing your monthly lease payments, thereby increasing your monthly option credits.
One of the questions we get a lot is, so what if I don't qualify in 3 years for my own financing? Our answer to this is, we're never going to leave you hanging. If you followed your end of the bargain, you deserve to have the time to make it work for you. We will lay out the contract in such a way that you'll simply be able to extend the terms for a 4th year at the same appreciation rate of 4%. The same goes for a 5th year, and so on. You'll also have the comfort of knowing that you'll be working with a credit counselor during your term to ensure your credit is healthy enough to qualify in the future. Doing a rent-to-own is not a free ticket and requires that you follow what is laid out for you to fix your credit and make the payments routinely and on time to be successful. This is no different than the responsibility you take on when purchasing a home with the bank. Remember, there's a lot of negativity surrounding rent-to-own, and people in your life may tell you not to engage in such a program. Rent-to-own is not for everyone,
but if done correctly,
it can be a great tool to leverage towards home ownership. In fact, Canada's Housing and Mortgage Corporation, or CMHC for short, recommends going through a rent-to-own program if bruised credit is preventing you from qualifying for a mortgage. Like all industries, there are good people who desire to do it right, and there are those selfish people that give it a bad name. And you need to be aware of those risks. That's why I believe it's important for you to have 2 basic resources at your disposal to protect yourself. The first is you must understand how it works and understand what your responsibilities throughout the term are. That's why we fully disclose how it'll work for you in an easy-to-understand contract. No surprises, just our responsibilities to you and yours to us. The second is you must know that you are working with the best professionals who understand the whole process and are looking out for your better interests. That's why we've worked hard to surround ourselves with the best people in the industry. We know that it's vital to you to eventually succeed. If you're ready to see if homeownership is for you, I urge you to fill in our application to get started.
We simply cannot help you if you're not willing to do the work to get the process started.
For those who are, we look forward to helping you achieve your vision of homeownership. Remember, there's no obligation to engage in our program, and we're not going to ask you for an outrageous deposit like some other companies. We want to talk to you first and see if our program is right for you. Once we mutually decide to go forward,
we'll lay out a plan for you and start putting this plan into action.
So make sure you fill out our